Every single Friday, we are jumping into the deferred sales trust and ways to grow your wealth using it, defer capital gains taxes, help your clients, friends, and family do the same. We believe that the biggest challenge when it comes to exiting highly appreciated assets is not having a clear plan and having a clear understanding of what strategies can work for your exit of highly appreciated assets. And that's where we're going to be diving into a couple of the biggest objections we're seeing when it comes to the deferred sales trust. And we want to help you overcome those objections so you can have what we call sleep well at night, before you close and when you close on the deferred sales trust, knowing that you're in good hands. And it has to do with the IRS scrutiny and the complexity issues with the deferred sales trust. And so we're going to try to make that really simple for you right now. And so let's start with this. With the deferred sales trust, it does offer some compelling advantages, especially when it comes to capital gains tax deferral and financial flexibility, which is why it's so attractive because of the flexibility. We believe right now flexibility and options, along with diversification and liquidity, is the way to grow wealth in a very effective way and not having to feel trapped by capital gains tax to not be able to invest into certain deals. And so that's what the deferred sales trust is so unique. However, like any financial strategy, each have their own set of challenges, and it's not a one-size-fits-all. And there's also objections that people can often cite. And so we want to go through some of those objections today having to do with IRS scrutiny. So people worry about the IRS disapproving of such structures, right? Potentially leading to fines or other legal ramifications. The unique part with the deferred sales trust is it now has close to a 27-year track record, almost 30 years going on of a perfect track record. What does that mean? That means thousands and thousands and thousands of closes, billions and billions and billions of assets sold using it, and over 24 no change IRS audits. So that means it's been tested, it's been looked at. These are state and federal audits without a single change and a single deferred sales trust, which is actually really remarkable. And so it has faced IRS scrutiny. In fact, we have other competitors that we go up against, and the number one question we ask all of them, because sometimes they are less expensive, and maybe they're even more flexible without a third-party trustee, and then all of these really cool things. We call these the magic trust, and we're like, wow, that sounds like a magic trust that you can really have all the things and none of the bad things. And we ask them the first question, well, what's the IRS scrutiny you've been through? And most of them, they just haven't faced it, or they haven't been around long enough to face it, or they don't think they're going to face it, which is actually the worst answer you could have when they say, oh, well, it's outside of the IRS. Well, you don't want to be the one who gets tested where they say it's actually inside of the IRS. And so with the deferred sales trust, we fully report everything. We help you to report it properly with your CPA. Any income that you receive, you'll pay tax on. That's reported. And so it's the most important thing that the IRS scrutiny has been tested and it's been scrutinized, and there's been third parties as well with the deferred sales trust. There's national law firms, CPA firms,